All right, so let's go ahead and get started with it and start presentation. All right, guys, so what we're going to be getting into today on this video is profit maximization. So I just want to introduce some basic concepts and simple tactics that you can use to maximize your profits within this market. But I will say before we continue with this video, if you haven't already, if you don't have a thorough understanding of the following subjects like um, the calculation of pips, lot sizes, trends of the market, proper risk management, I definitely recommend you familiarize yourself with these things, whether it's going back to look at the ECA videos or checking in with your mentor and having them to give you further explanations or a thorough explanation of this, because these are subjects that I will be mentioning in this video, but I won't be delving into or over explaining just for the sake of what you came to this video for. All right, so without further ado, let's get into it. So for profit maximization, I'll be just really heavy on three simple concepts. Three simple concepts that I'll be basing my examples off of. So I'll explain what the examples will be of closer to when we switch from this presentation to the whiteboard. So with twin trading and retracements and pullbacks, these are two tactics that you can utilize to be able to maximize your profits within the market. But even when it comes to these two tactics, I'm still going to be heavy on proper risk management, you guys. So with proper risk management, even though we're going to be maximizing profits, we still want to be risking within our means, right? So when maximizing profits, we want to stay within the means of our risk that our account can handle, right? So this doesn't mean that we go crazy with the lot size. This doesn't mean that we go crazy with the risk. It just simply means, like I said, being able to risk below your means while effectively maximize your profits within the market, and then just understanding a system or a structure in which to do that. So with twin trading, on the next slide is going to be a visual, but twin trading is simply you having more than one position open on one trade, right? So as far as what that looks like, now mind you, this is a picture that I got from the internet. So don't pay attention to the balance. Don't pay attention to the EUR USD trade or the EUR JPY trade. I do want you to pay attention to the gold trades. So gold in here is abbreviated as XAU USD. Right, I forgot that I can use my mouse on here, but XAU USD. So this person, they are in a trade for gold, right? But they have two positions open. So on the first position, they are selling gold for 2 cents. On the second position, they are selling gold for 4 cents, right? So you can see that each position, they have two different lot sizes, but the whole concept of twin trading is that essentially you have more than one position open, and this again allows you to maximize your profits instead of just getting potential profits off of one position. Open up a second one and you can double it or triple it, whatever the case may be. And then for your retracements and your pullbacks. So the tactic of twin trading is more so for beginner traders. If you are a member within the roundtable community, you are aware that we pretty much track our progress through phases. So twin trading, being that is something that's very beginner, something that's very basic, is for those individuals that are within the phase one or within phase one. But being able to capitalize off of retracements and pullbacks does require you to be in phase two or above, right? So this is why I want to emphasize with strategy and analysis. So once you have a greater understanding of chart patterns and candlestick patterns and trading patterns, right? You're able to come up with your own analysis. Maybe you've been studying one currency pair and understanding the movement of that currency, right? You're able to anticipate tracement levels within the market and pullbacks within the market. And then therefore, through profit maximization and through the tactic I'll be showing you in this video, you're also able to use your proper risk management while being able to take advantage of those retracements and of those pullbacks, right? So just a visual for this. Let's start off with the left picture. In this uptrend, right, we have our low and then we have our higher highs and higher lows. Okay, So due to study and analysis, a trader can capitalize off of the higher lows. So we're in an uptrend, the market is going up, creating higher highs and higher lows. And off of these higher lows is where you can place more positions, right? So your initial position may be down here, then the market will go up, retrace back. You more than likely anticipated that, right? Or predicted that. And then you were able to place another position and therefore maximize your profits within this uptrend. Okay. And then vice versa for your downtrend. Downtrends have lower lows and lower highs. So a trader's initial position could be up here at the top. Price begins to fall or begins to sell, and then it can retrace and then create a lower high, and then so forth and so on. So due to study and analysis, a trader can capitalize off of the, I think I put lower lows down here, but it's actually the lower highs, right? So you can capitalize off of your lower highs. And again, that's why I say with study and analysis, someone could ask, like, why, how do you know that this trend is going to have higher highs, or this trend is going to have lower highs or lower lows, whatever the case may be? It's because you've anticipated and you have an analysis for that. Okay, but let's go ahead and head to the whiteboard. So I have two examples for each of the 10 trading and the retracement levels. Both will consist of different dollar amounts, and we're gonna go with there. Make sure you guys can see this. Okay, awesome. So let's go ahead and just dive into example one. And this will be twin trading on $100 account. And I'm going to make this a little bit smaller. Okay. So let's start off with the trade idea. You check out our trade idea that's sent from the chat, and it says to buy EUR, JPY. Your TP is 50 pips from entry, and your SL is 20 pips away from entry. Okay. Boom. So with proper risk management, I like to say don't risk more than 5% on your account. So 10% of 100 would be $10. Therefore, 5% would be $5. So in your head, you have it that whatever trade I get into or how many positions that I have open, I don't want to risk more than $5 on my account. And let me go ahead and say this too as we are going through our four examples. Listen, I'm giving you the proper risk management for what 5% looks like, okay? But throughout these examples, I really do want to emphasize the idea of you evaluating your risk and your reward before you hop into a trade. You being okay with that risk and you being okay with that reward, right? So if you don't like that, oh man, I can only use low lot sizes and therefore I don't have enough profits. The idea is not to increase your lot size. The idea is to increase the money that you have in your amount, that you have in your account, right? So if you want to use higher lot sizes, increase the 100, right? Add more money into it. Add an extra 100 or whatever works for your financial situation right now. Okay. But the idea, like I said, is to be okay with our risk and to be okay with our reward. So again, we don't want to risk more than $5. So I'll go ahead and erase this over here. Okay. And we're going to see what one position looks like running. And of course, twin trading, we want to see what 2 or 3 positions look like running. Okay. I'll move this up here, and I'm actually going to put a line just to divide all the math here. It's going to be some math. All right. So with the $100 account, I recommend using lot sizes like the ones I'm writing. So a 1 cent lot size, a 2 cent lot size, and a 3 cent lot size. Okay. If I have one position running, let's say it's that 3 cent, I'm going to go ahead and evaluate my risk and reward. So my risk with the 3 cent lot size, I'd be risking $6. Okay, cool. My reward, which I'll abbreviate as REW, would be $15. Bet. Okay. Now with 2 or 3 positions, that can either look like you having 3 positions of a 1 cent lot size, or maybe 2 positions and one is a 2 cent and one is a 1 cent. But each of your positions, their lot sizes are equaling up to 3 cent, right? So let's see what a 1 cent looks like if we were to do the risk and reward for that. My risk would be $2 and my reward would be $5. Cool beans. So even if I were to risk a 1 cent lot size 3 times, it would be up to the 6 cents. So that's why I say make sure that whatever your lot sizes are, they're equaling up to the highest lot size that you can use based off of your account. Okay. Now that's just with a $100 account. Oh, and this was something I was going to note as well before we move on. With these trade ideas that they send out, sometimes they can have more than one target price. So for this example, it only has one target price, which is 50 pips away, but target price 2 could be 100 pips away, or maybe it could be 70 pips away, right? But the idea is if it does have more than one target price, another way for you to maximize your profits is for all of your stop losses to be the same for each position, right? So position 1, position 2, position 3, and then your target prices be different. Maybe position 1 goes to target price 1, but then position 2 and 3, they go to target price 2, right? So that way you're securing your profits for TP1 and you also have the potential, right, to secure profits for target price 2 as well. Okay? But that's something else that I wanted to add in. But let's go ahead to example 2. And this time we are going to do it on a $500 account. So example 2, and this is twin trading on a $500 account. I'm going to give you the same trade idea, and we'll change it up for our next 2 examples. But this is a buy on EYJPY. TP is the same, 50 pips. SL is the same, 20 pips. We'll make that a little bit bigger. Okay. Now with a $500 account, we want to keep in mind what 10% looks like, what 5% most definitely looks like. So 500 right here. I do understand that 10% of 500 is 50, and therefore 5% is 25. Okay, so this is telling me that according to my $500 account, and according to not risking more than 5% of my account, I don't want to risk more than $25. Okay, so what does that look like? What does that look like on a $500 account? I'll say that your lot sizes could consist of 3 cent, a 5 cent, and a 10 cent. Sorry, that looks so sloppy. Okay, and we can erase all this right here. We got it in that we don't want to risk more than $25, right? Okay, bet 3 cent, 5 cent, 10 cent. So let's go ahead and put our, see how one position looks on here. And we can also see how 2 or 3 positions look. Okay, I'll go ahead and erase this at the top. And I'm actually going to move this up a little bit. And we'll put our line. All right, so with one position, let's say we use our highest lot size of a 10 cent. My risk for that would be 20 bucks. And my reward for that would be 50 bucks. Awesome. But you want to see how it looks with multiple positions. So let's say that I decide to do 3 positions. And I'm not sure if I've made this clear, but the reason why I say 2 or 3 positions is you don't want to be in more than 3 positions at one time. All right, so keep it below 3. If I were to do 2 positions, I could do, let's say, one position of a 5 cent and another position of a 5 cent. Okay, if I want to do 3 positions, perhaps I could do one position with a 3 cent, another one with a 3 cent, another one with a 3 cent. Okay, so let's see what our risk and reward is for that 3 cent. My risk would be about $6. Yes, $6. My reward for that would be $15. Okay, so that if I were to do or risk 3 cents 3 times, my risk would only be what, 18, I believe. 6 times 3 is 18. Yeah, right. Or let's say I do 5 cent 2 times, then I'm risking at most $20. But again, this is how it can look. This is how you can spread your risk, right? Instead of putting all your eggs into one basket, you can put your eggs into 3 baskets, or maybe you can put them into 2, right? But that's how a $500 account could look with trading or twin trading. Okay, let's go ahead on to our next example. And now we are moving into retracements and pullbacks. Example 3. Pullbacks. We'll start off with the $100 account. Make this a little bit smaller. And this time we're going to use a gold trade because I know there are a lot of people who like to trade more volatile pairs. So let's see how that looks. They call out a trade and they say to sell gold. Your TP is 100 pips and your SL is 30 pips. Boom. Okay, now we have 100. Remember that 5%, just writing it over here to remind everybody, is $5. So you're like, okay, how can I do this with something like gold, right? And still not go over my 5% risk, right? And if I do go over my 5% risk, then I'm okay with whatever that risk looks like, right? But for this, we're just doing $5. So I would say with a $100 account, and if you want to trade something like gold, stick with a 1 cent or a 2 cent lot size. Okay? And then just to see what your reward or your risk and reward were to look like, a 1 cent, if you were to risk it 30 pips, you'd only be risking $3, right? And then your reward would be 10 bucks. Okay? And if you wanted to do a 2 cent, your risk would be $6. All right, so just $1 over our 5. And your reward would be why am I 20 bucks. There we go. It's kind of late. Mine is getting a little hazy there. But yeah, this is what your risk and reward looks like with each of your lot sizes. Okay. So now what I'm going to do is I'm going to show you what capitalizing off of retracements and pullbacks looks like on the chart. So let's erase all this and give me just a minute to set up everything for you guys. Oop, didn't quite mean to delete that one. Yeah, let's bring that back. Oh wow. I will say let's make it just a little bit smaller. And I'm gonna put one right here. This would be an example for your retracements, an example for your pullbacks. Now I'm pretty sure I can do this in different colors. No, I can. We can get fancy for just this example right here. And excuse me, entry can just be black. Okay, so this is your SL here at the top. SL. This is your TP here at the bottom. And the black is your entry. All right, so this is a sell for gold. For our retracement, let's say that I pop my initial entry right here and price starts going down, but then it retraces a little bit and then it goes down. What you could do is capitalize off of this retracement right here. If your initial one was your first position, right? You put that 1 cent. Your second position, you can add another 1 cent, right? You're still, if you're utilizing the, low lot sizes and you're still within the risk, right? This is still within your risk and you're still able to maximize your profits and make a good gain off this trade, okay? But for your pullback, what that essentially means is you pop your initial entry, right? Position one, price goes down, but then it pulls back into the negatives. So even on your MetaTrader 4 screen, you're in the negatives, right? Your trade is red right now. And you like, yo, like what's going on? Relax, because sometimes your trade can go into the negative, but if you give it some time, it can go back into the positive, right? Or, it may hit stop loss. Who knows? But don't get automatically scared or don't think it's an automatic L if your trade does go into the negatives, okay? What you can do is you can capitalize off of that pullback. And again, this trade, right? Let's say it was your off of your own analysis. You wanted to trade gold and you had your SL at 30 pips and you had your target price at 100 pips. Maybe you anticipated the pullback, but it pulled back to a certain, maybe it was a recent support or maybe it was a recent resistance. Nonetheless, you capitalized off of that and you put your second position. Your first position was 1 cent, right? In your second position, you put another 1 cent. So where after that pullback, price decided to go back into the positive, and it ended up hitting TP, right? Now, maybe you might be asking, well, what if it does another retracement? Like what if it is like this? Can I pop another one? Well, based off of your amount, the amount of money that you have in your account, you don't want to risk more than what you already have, right? So you've already done your maximization, just let the trade ride out until it hits your target price, okay? Now, another thing about this example for your pullbacks is on this second position, being that you're closer to your stop loss, you've actually lessened your risk for position two. Instead of like for position one, stop loss was 30 pips away. But for position two, it was only, let's say, 10 pips away, right? So you've lessened your risk for position 2 and you've actually increased your gain, or you've increased your reward for position 2. So there's no really like big L's that you can take um, on this scenario right here, because again, you're still within your 5% risk, right? And now you've actually increased your reward for that trade. Okay, but that's an example for a $100 account. Let's move on to our final example of a $500 account. It's going to be the same ordeal, same trade and everything. Example 4, and this is retracements and pullbacks on a $500 account. Okay, we're going to make this just a little bit small and have this up here. And we can go ahead and put up the same trade idea. TP, 100 pips, SL, 30 pips. Oh, I forgot you make this bigger here. All right. So let me remind you that on a $500 account, 5% would be 25 bucks. Okay? So lot sizes or examples of lot sizes that you can use on a $500 account when you're trading something like XAU USD with a stop loss that's about 30 pips, I would say you can use, look back at my notes here, make sure I'm right. I am. Okay. You can use a 3 cent, a 5 cent, and a 10 cent. Okay. Now this 10 center, right? 10 center. This 10-cent lot size you would only use on one position. You would not make multiple positions of 10 cent, right? But you could do that with the 3 cent and 5 cent and let it equal up to 10 cents. So it's not like twin trading, of course, but you can use two positions if you have a multiple retracements, right? You can let your initial position be 5 cent and your other position be another 5 cent. Or if there's two more retracements or two pullbacks after your initial position could be 3 cent and those other two positions could be 3 cent, to where again it's equaling up to the 10 cent. But let's see what our risk and reward looks like for our 5 cent and 3 cent. Oh man, I deleted the trade again. Okay. XAU, USD, and leave it right there. If I were just to use a 10 cent on here, my risk would be $30. So that's 5 over the 25. Okay. And my reward would be, I'm trying to move this out the way. Okay. Reward would be 100 bucks. Cool. If I were to use a 3 cent over here, my risk would be 9 bucks, I believe. Yeah, 9. And my reward would be 30. Cool. So remember, I said you can use this multiple times. So let's say you have one position open for 3 cent, your risk is 9. You have another position open for 3 cent, your risk is 9. You're still using or risking 18 bucks, which is still below your 25. And even if you were to open up another position with the same lot size of 3 cents, it would be 27. Okay. And finally, for our 5 cent, my risk is looking like 15 bucks. and my reward is looking like 50 bucks. Okay, so with this example, of course, you can risk up to $30 if you have two positions open with the 5 cent. So now let's put it on the chart, which you guys know takes me a little bit of time. All right, so we can keep it simple with the colors. SL, TP's down here. Orange is in the middle. All right, so you guys know with our retracements, in this example, we have position 1 running. It goes down, retraces, and then goes towards TP. On that second position, now we have two positions open or running. Let's say we put a 5 cent right here, like that, and another 5 cent, and boom, we've efficiently maximized our profits on there. All right, and we're still within our risk. Okay, and then for our pullbacks, remember, a pullback is when the market has your trade going into the negatives. So for our initial position, let's say we do that 3 cent, market goes down, then it pulls back, right? You can pop that second position of a 3 cent, it goes down, and let's say it retraces. You can do your final one. If it does any more retracements or pullbacks, I wouldn't recommend putting more positions on, because now you're at 3 and you're risking the most that your account can take, right? But let's say it does ended up hitting TP. But that's how you can, like I said, have multiple positions running while risking the appropriate amount for that $500 account. But yeah, guys, this is all the examples. If you have any questions, you can either reach out to the person that directed you to this video or reach out to the person that brought you into this community. Or you can reach out to me personally. My name is Zanaya, and my Instagram tag is actually to the right of here. I'm pretty sure it's showing on here, but if not, my Instagram is at @AnayaMonet _. That's ANIAMONET. Or if you know me personally, you have my number, then you can reach out to me on there. But other than that, just send me a DM, and I can get back with you as soon as possible. I hope you guys enjoyed this video, and I look forward to seeing you on the next one.